The market plummeted. This was expected and was very overdue. Traders will buy the dip, of course, and this will be seen as a buying opportunity. The fact is that there is extreme volatility and fragility in the markets, but what isn't being acknowledged whatsoever is that there is a massive wave of bankruptcies and store closures, businesses shutting down, and an unpayable level of debt that is all converging in 2020. The Fed has a lot of work to do. You came here for the truth, so let me unveil that for you. Today we are going to first talk about what's going on in the markets. I'm sure you've seen it for yourself. As I look at the futures, they've already come up as the buying the dip mentality takes place. But there's more going on here than the fluctuations of day-to-day news, or should I say noise. This is very important because it shows you underlying all of this structurally there are some serious problems. We need to go into this in depth, and I also want to cover what's happening with the economy. I like to get into that because even though the two are completely disconnected, it's extremely important, okay? If your neighbors are losing their jobs, the light ahead, well, of course, that's going to be an issue, not just for you, but for everybody else, and that brings the economy down as a whole. We need to be working our way towards more positivity, and that doesn't look like it's happening right now here in 2020. I'm sure you've already seen it, but I just want to cover it quickly for those who haven't. You could look at the major indexes. Top three are the S&P 500, NASDAQ, and the Dow Jones. For the Dow Jones, moving down 1861 on the day. The NASDAQ moved below 10,000 after peaking above that. And the S&P is straddling 3,000. Okay, all of the indexes came down. The Dow Jones down 7% in a single day. So if you look at this on a day-to-day, of course, it's fluctuating. Who knows when you're watching this particular video, you're going to see a lot of that volatility. But when you look into it on a different level, we have seen this, of course, expanding dramatically recently. And if I pull up the mouse here, I can go back a month, for instance, and you will see that this has been riding further higher and higher. You look at this on the 3-month, it's been escalating to new highs very consistently. There have been dips every so often, but in general, it's been moving higher. Thanks to the Federal Reserve for that. Largest Dow drops of the year. You can see right here the 10 largest one-day percentage drops in 2020, and that just shows you June 11th is what we're seeing right now, one of the biggest, but we also had some serious ones back in March 16th, 12th, and 9th. It just shows you, gives you an idea of what's been happening. This is significant, but of course, the only question is how long until traders start to buy the dip. We'll see how this all turns out in the coming days. Frothy trading in bankrupt companies, penny stocks sent red flags that pullback was due. Well, of course, that's true, but did the traders actually respond to this? No, because they just buy the dip right away. This is not a realistic market anymore. This exact mentality was taking place back in 2000 when people who knew nothing about trading were suddenly getting in. They were becoming experts. Why? Because basically every single day the market kept heading higher and higher. They didn't know what the hell they were doing, but they were making money, so keep piling it on. But you can see today that this really isn't a good thing, because without that education, people usually get sideswiped and they don't know what to do in those cases. Our friend Jim Cramer actually pinpointed this back in March as well as right now in June. What the hell is happening? Where are the sellers? That was back in March. And where are the sellers? Cramer worries about stock market getting too far ahead of the economy. He seems to be able to notice when exactly there's too much euphoria. Pretty interesting anyway. I know he's not the only one that said something like this, but it just shows you what's happening in the mainstream when even a person like Jim Cramer is pointing out that there's something very, very wrong with all of this. If you can believe it or not, check this out. Mortgage rates set new record low, falling below 3%, all right? The average rate on the popular 30-year fixed mortgage hit 2.97%. We'll see if this continues. It looks like the trend is certainly down. They're not the only country experiencing this. The US is doing it. I'll show you Canada in just a second. Many places around the world, mortgage rates are dropping, of course, along with interest rates. This really just exacerbates the initial problem that we have with real estate, where so many people literally can't afford it. Well, you can stretch it over a 30-year period. You can pay the insurance on the home so that you only need to put, let's say, 5% down in so many cases. Well, you're going to be paying a large monthly sum, and this isn't going to help in the long term, but this is what they do. They try to expand the bubble, expand the bubble, expand the bubble, instead of letting it deflate so that you can have people buying in, and then it will grow at a normal pace over the next few years. But nobody wants to see that. This is a sine wave. It's always like this, but they're trying to basically stop the bottom part from happening. And when in the world would that ever be a good thing? You're messing up nature, and that's not going to end well. Rates on Canadian mortgages have fallen to the lowest levels ever, with one bank, HSBC Canada, now offering a 5-year fixed rate mortgage at 1.99%. Unbelievable. They're not the only one that's going to do this, of course. We'll see all the other banks follow suit as we continue to go further and further down. There have been some serious deals out there, and this right here just shows you that you can borrow a lot of money for a long period of time. Why not, right? That's what they're all doing today. Really quickly wanted to mention this here. Federal officials responsible for spending $660 billion in taxpayer-backed small business assistance said on Wednesday that they will, check this out, not disclose amounts of the recipients of subsidized loans, backtracking on an earlier commitment to release individual loan data. And this just shows you what's been happening all along. They tell you one thing: oh, don't worry about it. Everything's going to be public. We're going to make this known that you're not going to have any issue with this. And then after it's fallen out of the news cycle, they publish this type of information in the media. Nobody really cares. This is what we're dealing with on a single day. There is just so much coming out that I can't keep up with it. I'm trying to bring it to you. This is important, of course, but most people, they simply don't care. Fed's balance sheet ticks up to $7.22 trillion. This is unbelievable to see how far it has come. I don't really enjoy seeing it go to these levels, knowing what's happening with the currency. It's destroying the currency, but unfortunately, people are cheering this on right now. Some good information out of this Bloomberg article. Check this out. This is the legacy of the bank bailouts that followed the financial crisis and the consequence of the all-in actions by the Fed in recent months, which is why in this monetary policy regime, no bet seems unwise. Even buying the shares of bankrupt rental car companies after they have already risen 1,000% in a week. But to keep the game going, the Fed will need to keep its policies in place in perpetuity. Then again, the Fed might wonder why it would ever end them if they increase the wealth of 60% of the nation that owns stocks and supposedly creates jobs without inflation. This is what we're dealing with right now. It's unbelievable, but it's absolutely true. I'm glad that they actually allowed something like that to be published. This is the way it goes. I'm just looking at it thinking to myself, where is the end in all of this? Because nothing rises forever. The crash that we saw, just recently was so epic. When you looked at it, it was a straight line downward every day. The markets were falling 1,000 points, 2,000 points, and it was just, as Bill Ackman said, hell is coming. And then, of course, 2 days later, completely flip-flops. But anyway, what we're looking at here is something that is just so aggressive. The volatility is so high, and yet we haven't really acknowledged the underlying problems. More than 100,000 small businesses have permanently closed. This is, of course, based on a new study that is always going to be sample data. We're not going to get the accurate numbers until later, but usually they're fairly good estimates, okay? Especially when we start pulling data from multiple points. This is unbelievable. It's anything like we've ever seen. And this is 100,000 businesses. How many people are going to be affected by this? Not just in the short term, but in the medium term as well. They're not going to be able to find work if businesses aren't necessarily hiring. If they were a person that had a few employees, let's say, what are they going to do right now? They are going to be in big trouble with the debt that they owe, all the employees that they weren't able to pay, perhaps. apps, they got these loans from the government, but what does that do? It just extends things further into the future. If you don't have revenue coming in, you're in big trouble. That's what's going on today. U.S. jobless claims rise slower, 1.54 million in early June, but layoffs still extremely high. That's right, you got to mention, well, it's slower than what we saw before. Here, you could see the numbers. This is showing you people collecting unemployment benefits, continuing jobless claims, unadjusted, filed through state programs. It's a very high number, looks like around 20 million. The numbers don't even actually accurately depict what's happening today. I've shown you numerous different pieces of data that are very clear to me as to what's really been happening here. It is important to look at all of it, not just the U3 unemployment rate. That's silly. Millions of people are still losing their jobs each week, and you can see those right here. Just gives us an idea of what's been happening. As we have seen, the numbers technically are declining as we move through, but people are in a dire state right now, and that's very clear. It's present in so many different stats. And what's funny is that the global central bank balance sheets have become the most important thing. They're the reason why the sun comes up in the morning. This chart here from Bank of America is just showing you the global central bank balance sheet expansion in historical context. The blue line is the percentage year over year, and the yellow is the dollar value year over year. And you can just see comparing on the more towards the left-hand side, that's the financial crisis, and on the right-hand side is what we're seeing currently. And it's accelerated beyond what we can ever imagine, and we've only just begun. The balance sheet of the Federal Reserve is likely to go over $10 trillion, and there's no possible way that they'll ever be able to wean off of it. So it's just, this is really what we're hanging on to. We're hanging on to a central bank, the worst of the worst. Well, anyway, that's all for this video. If you found it informative, please hit that thumbs up button by clicking one button on your screen. You are supporting me. Thank you very much. If you want to check me out on Instagram and Twitter, I'm putting in new information every single day, so definitely do so at The Money GPS. If you want to learn how to sell stuff online, e-commerce, well, there's a course out there for $1,000. There's another for $2,000. You can go there and definitely get some good stuff. But if you want a free course that is available to you that will explain everything from the very beginning, it's for free, the AmazonGPS.com. If you want to understand the financial system from top to bottom, A to Z, explained to you very, very simply, this right here is what you need to know. In these two books, you'll get everything all explained. Link in the description. If you want the audiobook, themoneygps.com. Very important video that I hope you will watch if you can. Click it. I'll see you there.